All right, we are live. Appreciate everybody showing up here. We're going to be going through NVIDIA earnings here shortly. I think earnings are supposed to come out at 4:20, so we're going to be talking about some of the supporting evidence and overall market conditions coming into these earnings. How we're playing these and what kind of to expect here moving forward after we get the market reaction. We'll also be scanning the market. See if I can go live, figure this out. Going live on TikTok. See if it actually works for once. See if I can get the double stream going on. All right, I think we're good. Okay, so if you're turning in for the first time, welcome. Appreciate the opportunity to yap at you for about an hour here. This is an important earnings. I don't think there's a more important earnings this year. NVIDIA is the poster child of this bull market, not only from an industry group and sector standpoint, but from the entire bull market. The theme here is NVIDIA. It's been NVIDIA since the October 2022 low, and it continues to dominate both popular media and market movements. Just based off of the weighting of this thing, it tends to move indexes. It's a $3 trillion company. And whichever way the market wants to move this NVIDIA trade, it's going to impact the indexes. So alongside with me here, we have Randy, who's a recent intern here at TTI who helps us out with some data aggregation. And if you're inside of TTI, you've seen some of his trade ideas. So Randy, thanks for joining us. And then Josh as well, our head of crypto. We're going to be looking at what internet funny money is doing during all of this bonanza as well. Speaking of internet funny money, Josh, how does it look today?
If you opened up your brokerage or your exchange account and you only looked at the price of Bitcoin, you would think that the markets are green across the board. Bitcoin looking strong and mean, coming out of that kind of high and tight consolidation fractal at 94.3K, just below its all-time high that it tapped this morning. Actually,
I don't know if my sound went out or you stopped talking, but I can't hear you. I'm going to go ahead and restart the Discord really quick. See if this will fix it. So earnings are slated to be at 4:20. So after market closes, we're going to see, let me get a sound check really quick, Josh. Nope, not working. I'm going to go ahead and plug the headphones back in. Was hopefully getting some sound over to TikTok, but I'm not going to stress over it. Let me get one more.
check Bitcoin.
All right, it works. Yeah, Bitcoin looks great. I think the lapse between market closing in about 5 minutes and what happens in the crypto space is going to give us a general idea of which way the market thinks this is going to go. If we think about the crypto market in particular and how we've attacked it inside of TTI, essentially this is just an off-ramp for liquidity, right? As liquidity comes into the market, it looks to permeate through, and generally the higher beta, the more risky assets tend to get that liquidity, and they respond positively and aggressively in certain directions. Crypto fits that bill for me. Think of the types of stocks that have been breaking out lately. Your highly speculative crap stocks, your beat to crap stocks that haven't really done anything since 2020 or 2021. I'm looking at you Square. I'm looking at you Lemonade. I'm looking at you SoFi. These crap stocks that defined the bull run in 2020 and 2021, the Cathie Wood ARK type stocks, are breaking out again. It just so happens that crypto is breaking out again. That is not a coincidence for us inside of TTI. So because liquidity, obviously, and volume falls off after the market closes, well, in the crypto space, it doesn't. And there are correlations between the TradFi market and the crypto market. So there's a decent chance for the first 10 to 15 minutes after the market closes, we're going to see liquidity and risk sentiment either flow in or flow out of the crypto market with anticipation of this NVIDIA earnings. So I think all of this, it matters a lot, right? Obviously, it's all interconnected. We don't think that any of this stuff moves by itself. It's all highly correlated. And so we're going to be able to look at that Bitcoin chart once the market closes and kind of get a general idea of, which way to market participants expect this earnings to go. We looked at this about 10 minutes ago, but the expected move on NVIDIA here is 133 to the downside and 157.5 to the upside, which would obviously put us at all-time highs if NVIDIA beats its earnings or whatever, the market reaction to it at least is positive. Really, the options market is pricing at a top of 157.50, which puts us into big blue sky, and we have that overall price target at 170, which we have a bunch of exposure in NVIDIA. If you're new to TTI or you haven't been watching a bunch of our content, we have positions in NVIDIA that are already free, meaning we put these positions on weeks and months ago, and they're up and over 100%. And so we have no risk going through this earnings event in regards to NVIDIA, but we do have exposure. So if NVIDIA does break out and hits that all-time high, the 157.5 or whatever, our overall price target is 171. We're going to be able to make a bunch of money. On the other side of the equation, if it doesn't do well, if it breaks down towards that 133 area, the only thing we're going to lose is either unrealized profit or opportunity cost, right? We're not going to actually lose any capital in our accounts. But I want to point something out. If NVIDIA does break down to the 133, 132.5 level, we're just right back to where we were on October 31st. And I think that's key. There's a lot more space to the upside for NVIDIA to surprise than I think the downside. If we don't do well, if the market sells NVIDIA off, we have support on the way down that we can kind of risk on and risk off and formulate some ideas here on how we want to play NVIDIA. If we want to play NVIDIA to the upside, you're in la-la land. And I think that for most market participants, that's the harder trade. If NVIDIA gaps up here after hours and takes the market with it, the harder trade is going to be chasing that gap up. Because like I said earlier, with whichever direction NVIDIA moves, the market, the indexes are probably going to move as well, right? So checking to see if there's any questions that are coming in. Nothing yet, which is good. I can bring this over here. All right, so once again, we do have exposure in NVIDIA going out to January and into 2025. They're already free. We were able to open up positions back in September, post August 5th breakdown when everybody thought the market was going to crash and die. It didn't. Surprise. We were able to layer in, and a bunch of these trades right now are free. We'll see if they continue to work for us or not. If you're live on TikTok, you can see my opens positions list and one of my options accounts there. Just had a 1,000% winner on grab, slightly pulling back here end of day. The NVIDIA position that I have right now in this options account is up. A couple different contracts are up 88% across the board. They are free though, so we have held these for an extended period of time. We'll see if they end up paying us out. Question, would you expect higher than 171 just off the report? Randy, are you here? You want to answer that? What are your thoughts on that? The expected move, given the options market, is 157. What are the odds that we hit a 170 or higher just off of earnings?
You said the expected move was what? What was the high range of that?
Like 157.
Oh, then that's currently like 9%. If it goes up to 170, you're talking like a nearly more than, it's almost double the expected move. I don't think a jump to 170 is probable.
It's probably not going to happen, right? And think about the
not
implications from
over one session.
Think about the implications of a market cap. Like how much money would you need to push this stock 20% in a single direction? At a $3 trillion valuation, you're going to need a lot of money to be able to push that. And I'm not saying it can't happen. We've seen these things, particularly Meta. We saw Meta gap up 20% off earnings, but can a $3 trillion stock do it? Maybe, but the options chain is telling us that it's probably very unlikely that this is going to happen. So at least not based off of the report. We do have that 170, 171 price target, but we have until January 17th to hit that. So we have still almost 2 months for it to make its way up there. What you're looking at here is NVIDIA on the 1 minute here. The report comes out in about 20 minutes here, 4:20. So what we're going to do is we're going to look at what Internet Funny Money is doing in the meantime, because obviously Internet Funny Money gives us a general idea here of what the risk takers in the market that have a substantial amount of cash feel about these binary events, right? As soon as the market closes, retail isn't necessarily trading, and a lot of the institutional flow is done for the day as well. So liquidity and volume drop off after hours until the earnings report comes out. But volume does not drop off in the crypto market, and these guys are still interested in the crypto market. And because we know that they have a high correlation in the crypto market and TradFi market, we can generally get that idea. So right off of the close, Bitcoin's up slightly on the 1 minute chart, 4:01 p.m., and we are up slightly off of the close. So we'll see if that continues. As of right now, did we officially hit 95,000 in BTC?
This morning we tapped it for a quick second and then kind of just reversed back down to low 94s. But good chance we hit that later today, potentially when the European or Chinese markets open overnight.
So let's think about this really quick. If NVIDIA reports and the market likes it, what is the reasonable response for Bitcoin? Do you think we're up and over 95?
I would imagine so, yes.
Yeah.
I think we're going to be start chugging towards 96, and I think a lot of the altcoins have been selling off recently. I mean, you can look at Total 2, Total 3, or others, might reverse this downtrend. I think on the opposite side, if NVIDIA does sell off and misses its earnings report, even if Bitcoin pulls back to that, call it $90,000, $91,000 range, and we see, ticker total come back, I think it's still completely healthy for the continuation of the run. I know altcoins will take a beating, and a lot of swing traders will be stopped out of their positions. Memes will take a big hit, but when I'm looking at the total market cap of 3.06 trillion, you pull that up on the daily or the weekly, that is an absolutely beautiful cup and handle formation on the entirety of the crypto market.
Yep. No, I 100% agree. We'll look at that in 1 second. Really quick, we do have earnings out after hours on Snowflake as well. No response from Snowflake yet, but also one of the leaders last year, Palo Alto Networks, for the internet security industry group. This was a trade that we took last year a couple of different times, and I believe we took a trade this year as well. It's a net winner for us. Made a bunch of money in PNW the first couple of times we traded it. It did get hit during the summer, CrowdStrike, that fiasco, but it has recovered and is sitting up at all-time highs, has not responded yet, so it doesn't look like the earnings report is out. We are up slightly, but stocks like this, for whatever reason, market participants don't want to own, and that has been the losing trade for the last 2 years. Stocks that are showing relative strength. Just talking about this on Twitter, maybe 20 minutes ago, Randy put out a great tweet talking about Walmart versus Target, and you cannot, in my mind, make a better distinction for why you should be following price and not every other Looney Tune thing you could be following. Walmart has been on an absolute tear, minimum this year, but realistically, it's been on a tear for the last 18 months. It's really outperformed its competitors. Walmart sitting at all-time highs post-earnings, really broke out into that all-time high back in early Q1 2024, and over the last, 11 months, it's up almost 50%. Should that surprise you? Or should it surprise you that Walmart is outperforming Target? Well, for us inside of TTI, no, not at all. What has Target done over the same time period where Walmart broke out and ran 50%? Target has done nothing. It's completely range bound. Yes, today was a particularly bad day, but Target's been down here before a year ago. So this is a horizontal channel here that we're trading within Target. For the people that are looking for bargains, this is a bad time to own them. You're in the third year of a bull market with stocks screaming into all-time highs. Why are you buying the crap that is not showing any sort of relative strength whatsoever? Doesn't make any sense. So it was a great opportunity for me to hopefully impart that wisdom. Follow trend, follow price. Nearly always you're going to have better results over the long term than following stuff like options flow or following stuff like macroeconomic data or fundamentals or worrying about PE ratios and all of this shit that really doesn't matter. That is supporting evidence. You have to have a series of higher highs first to be able to get long. Walmart, perfect example, higher highs all year, Target not. So shout out Randy, absolutely fantastic tweet that you put out, and 100% agree with you.
I appreciate it. There's one thing I want to add to that too. So with Walmart and Target, the reasons that Walmart outperformed and the reason that Target underperformed as far as their earnings that they posted this past week, like literally yesterday or today and the day before, is because of the same thing. So Walmart outperformed because of an increase that they saw in discretionary items, but Target underperformed because people weren't buying discretionary items at Target. So I mean, it just goes to show too that fundamentals, even if you look at that, they can only take you so far, because the same thing that helped Walmart was hurting Target, and there was no way I think that you could have been able to figure out that by just combing through, net income year over year, or price to earnings, or valuation metrics and stuff like that. I mean, it was just way easier, and the better trade for sure was just following the trend with Walmart and having nothing to do with Target at all.
Yeah, I agree. Thankfully, at least personally, I don't care about anything except trend. I just don't care. Trend, relative strength, and momentum, those are the three things that matter to me. As long as price is confirming whichever bias you're looking to take. If you're trying to buy strong stocks, you should start with some higher highs. If you're looking to short weak stocks, you should start with some lower lows. This is technical analysis 101. And even if you're not a technical trader, if you're a fundamental trader, you can use technicals to time your entries better. I mean, it will just work out better in the long run if you buy while stocks are going up and short while stocks are going down. That is the winning combination. And that's not my opinion. We have the data to back that up. So 100% agree. Good job. Appreciate it. Any move in BTC yet? Looks like PanW is down.
Down a couple $100, but nothing substantial, nothing to worry anymore. If we start seeing $1,000 moves, that's when we can kind of pay attention and consider what that means. But a couple $100 is nothing.
PanW, the immediate response after earnings is down just slightly, about $8.
One data point for Bitcoin that we can talk about is that the move today has largely been fueled by U.S. investors buying via ETFs and on Coinbase. So on certain sites, you can actually see where inflows, volume, or open interest is occurring, which exchanges are seeing the largest amount of that, and also the premium between spot and perps. And today has been almost massively US-based customers and inflows occurring. So while Wall Street is selling off the broader stock market, they are buying Bitcoin.
Interesting. Good to know. And didn't IBIT just set a record for the amount of contracts that traded the first day it was listed? I read something like that earlier.
Yeah, like an astronomical, like an unbelievable record. I think 363 million, I think was the number I saw. And that doesn't include just regular spot volume on IBIT itself, which is in recent days and weeks been in the billions every day. Nevertheless, the first hour of market trading.
Incredible stuff. So PanW, Palo Alto Network, slightly down. Snow, on the other hand, up huge. So look at that little juxtapose here. Both software-related stocks, Snow up 14% after hours. PANW looks like it's down about 7%. But once again, all eyes are obviously on NVIDIA. Indexes will move based off of NVIDIA. We got about 11 minutes before they report. I had a question. Did we short anything going into this earnings? And the answer is, well, yeah, we did, but probably not the way that you expect it. We bought some downside protection, some cheap downside protection for our portfolio. So we are long. Obviously, we're in a bull market. We are long. If you're watching the TikTok stream, you can see portions of my positions list. We're long. We have exposure. We have positions that are up relatively large that will get hit if NVIDIA, or the response to NVIDIA, is down. We will take some unrealized losses on these positions that we have. And so what we decided to do was buy some cheap protection. And the way we did that was we went out and bought some QQQ 490 puts for next Monday. That gives us exposure through the end of the week. If the market responds negatively to NVIDIA, gives us a little bit of wiggle room to figure out what we want to do if we have to make some difficult decisions in towards the end of the week. If the market, for whatever reason, continues to sell off through Thursday and into Friday, we have some exposure to the downside. Now, it's not a perfect hedge, right? That's not how this stuff works, but it will stem the bleeding and give us a little bit of breathing room so we can start removing risk from our portfolios if it looks like the market's going to enter some sort of longer drawdown than what trends right now are anticipating. So as of right now, intermediate long-term trends are still very much up. Short-term trends are neutral. They were short earlier in the week, came back up to slightly bullish. We're going to go ahead and count that as neutral. So short-term trends are neutral. Intermediate long-term trends are still up. We grabbed some exposure to cover our portfolio in the event that the market does come down. But it's just very short-term exposure. We're still third year of a bull market. While NVIDIA will move these indexes in either direction, do we think NVIDIA is going to be the end-all be-all for this bull market if it doesn't perform well through this earnings? Probably not, right? It last earnings, I believe it gapped down 20%, and here we are back up at all-time highs. It's just going to make for some uncomfortable trading if you're long through this earnings event and it doesn't gap up, right? That's all it is. So one of the key things we do inside of TTI to manage our risk is when we open positions, if we can manage the risk while we are winning the trade, meaning as we're making profit on the trade, can we remove some of that to pay ourselves and potentially cover the initial principal that we put into the trade? The sooner we can do that, the sooner we can remove all risk from the trade. And that's really what we're all about, right? That's what we love to do. It's one of the hallmark signs of TTI is being able to take these 100% plus trades, sell half of the position and turn it risk-free. It gives us the ability, for example, this NVIDIA earnings, it gives us the ability to be able to sit through earnings without really freaking out about the current NVIDIA positions we have on the books. Because if it doesn't work, we lose $0. We've already removed all of our principal from the trade. This is what I like to call asymmetrical opportunities. It's asymmetrical trade. If NVIDIA dies, and by the way, we still have 2 months of expiration, but let's pretend NVIDIA doesn't do well, the market responds negatively to this, and the contracts go literally to negative 100%. We lose fees on commission, right? And the opportunity cost of owning the contracts. That's it. Where there's going to be zero loss of account capital. But if it doesn't, if it shoots up to the 157 or whatever expected high, we're going to make a bunch of money on these. So particularly for those of us that have straight calls, literally the theoretical profitability on a straight call is infinite, whereas our loss is capped at $0. And that's a trade I will take 100% of the time, right? You have infinite profitability and zero loss. That's something I'm going to hold nearly every single time. So that's what we're doing here with NVIDIA. It's a good question that there's no perfect answer for how much you should buy to hedge. I'll tell you right now that I'm one of the types of traders that think that hedging for the most part is stupid. I know some people love it, but I challenge anybody that comes into TTI that likes to hedge. I challenge them to go and look at how much money they've lost hedging. Most people lose way more money hedging than they would if they just didn't hedge whatsoever. Hedging for these outrageous events, fat tail events, absolutely makes sense. Hedging through August 5th would have made you a lot of money. But for people that habitually hedge everything, to me, that screams you have no conviction in what you're doing, because all you're doing is eating away your profits. Hedges, at least in the sense of how we're using them as discretionary traders, are cheap downside protection that should expire worthless, right? If they expire worthless, it means the brunt of your position is performing the way that you expected it to. So for example, if you're long NVIDIA and then you bought some NVIDIA puts through earnings to hedge, those NVIDIA puts should go to zero, and the calls that you have or the long position you have on NVIDIA should outperform what you just lost on the puts. If it doesn't, you're hedging wrong. You don't want a one-to-one. And so what I typically do is I put about a half R position on. That's what I did today. In both of my portfolios, I put a half R position worth of those 490Q puts. If they go to zero because the market shoots up, I'm going to make a bunch of money. If the market breaks down off of NVIDIA's earnings, those puts are going to give me some respite, but I'm still going to be at a net loss. I'm long. I'm bullish. It's a bull market, so I will lose money if the market comes down. Or at least I'll lose unrealized profits if the market comes down in the next 5 minutes. But those puts will help me. Give me some breathing room, because I'll be making some money on those hedges, and then I'll be able to make the difficult decision Thursday, Friday about whether or not we should be looking to reduce exposure in towards next week. Okay, do we have any parting wisdom for this upcoming event? We have 5 minutes. Randy, is there anything you want to talk about really quick before this happens? It looks like we're right at about where we were when the market closed.
Sure. So with NVIDIA, I think the initial jump, whether up or down, shouldn't be taken like 100%. Obviously, the close matters most tomorrow and what price it opens up at. But I think more so what is important than NVIDIA beating estimates is the guidance going forward. I don't know too much about the new chip that they've been talking about or working on, but apparently it's a chip that's going to be integrated in the newest versions of AI. And most of the times how these earnings reports go is the guidance and what management sets as far as expectations for the next quarter or for the next year matters a whole lot more than what the actual numbers are. Because the actual numbers, they're already reported, right? It's that forward guidance that can really contribute to the stock price moving really high or really low. So whatever this initial reaction is, I think it's best to just wait until the close tomorrow to see where NVIDIA actually ends up closing, and then paying attention to what the guidance is for the upcoming quarter.
100% agree. I think guidance is going to be the main thing here. I think the expectation is that they're going to beat, but that's the problem, is the expectation is already kind of priced in that they're going to beat. I think they have to, as Mike put it yesterday, they have to be perfect. And that's difficult to do. I'm not saying it's impossible, but it is difficult to do. They do have to give incredible guidance. They have to, say that they're going to kill it through next year. This is a $3 trillion stock that's up absolutely huge already, and so they have to continue to knock it out of the park. But one thing that, and I think you brought up a great point, is we really have to wait for the end of the market tomorrow to really have a good understanding of what the market thinks about the earnings report. I 100% agree, and is there a better example than yesterday? Right, the market opened up down yesterday, and it felt like it was going to be terrible. And then next thing you know, we rallied through the end of the day, and just the junkiest, highly speculative crap stocks rallied. And that's not something you would normally expect in a market that is about to roll over. Not saying it can't. It's just that risk on sentiment, buying stuff like LMND, right? We have a position in LMND that's up huge. We have a position in SoFi that's up huge. We have a position in Grab that's up huge. These beat to crap stocks that haven't done anything were down yesterday, and then they closed at the end of the day very strong. So if for whatever reason NVIDIA or the market doesn't perform well in about 3 or 4 minutes, does that cause everything to sell off immediately, a market open tomorrow, and then also close down? No, I don't think it does. So you're absolutely right. The cool thing is about the hedges that we bought, we have until Monday, right? And I think that's we had a good conversation and chose the right direction on there. We didn't want to play the Thursday or the Friday puts. We wanted to give this a little bit of time just in case, because let's use another extreme example. August 5th. August 5th, when everything gapped down and everybody was saying that that was the end, right? The Japanese yen carry trade blew up. What did we do? Basically the entire day once we gapped out, we went straight up. So you never know until we have a saying, I guess, from a swing trading perspective, is the close knows. You never know what's going to happen until the close is actually in. Okay, we got about a minute and a half before supposedly we're going to get the results here. Josh, any parting words with Bitcoin here? Internet, funny money, anything going on?
Unless NVIDIA has a crazy miss, I don't think it's going to have that big of an impact on Bitcoin's, maybe the daily candle. But overall, I think this is already in motion. We already said the daily breakout's incredible. You wouldn't know unless you looked at the rest of the market that things are red. So yeah, I think this might be a small pullback if we have a big miss. Otherwise, just a continuation. We'll probably continue to bleed down. Go ahead, sorry.
I was just going to say, because we have about a minute here, I just want to point out, you brought up the TOTAL chart. This is arguably one of the most important charts in the entire market from a risk standpoint. Even if you're not trading crypto, the simple fact that there's over $1 trillion now being thrown into the crypto market, and if this were any other chart, you'd be buying this all-time high breakout, wouldn't you? So what are the broader ramifications of not only the price of crypto assets, but the TradFi market when the total crypto market cap is breaking out? Think about that. That is not typically bearish. You're not going to see all-time high breakouts in market caps on things where people expect them to go down, right? That's not generally how this works.
Yeah, it'd be a different conversation if it wasn't $3 trillion, right? If this was 2020 or even earlier when the total market cap was $1 trillion, can obviously move much easier. But we're at essentially we're over $3 trillion. If this is flying, there's a good assumption that risk is still pulling it into the market, even though the Nasdaq or SPY may be having a red day or a red couple of days. Just like you said yesterday with the ARK Innovation ETF. That's breaking out. That's not typically something you would see in a risk-off environment. So
we will see the initial reaction here really quick. Sorry to interrupt you, is down. We're currently trading 139 off of a 145 beginning of the candle. So we'll see if the earnings, if somebody has the actual information out, feel free to post it on the Discord and then I'll read it out loud. But as of right now, the initial response is going to be down, currently trading 139. 140, very, very volatile moves here. We're already halfway back up, retracing 50%. Super, super volatile. Prevailing trend. Somebody go ahead and post that earnings for me over on. Somebody said I'm so polite when I'm talking to the public. It's true. I'm a tough love kind of guy. It gets stuff done. NVIDIA reported earnings with an EPS of 78 cents, beating expectations of 75. Revenue beating expectations as well, 35.1 billion over 33.1 billion. So the market, like Mike was talking about yesterday, needed a perfect earnings, and as of right now, at least, the initial response is that it was not perfect. Right? Market responded negatively here, currently down. Really not by a whole lot, by the way. The bigger thing here is the expected range low was somewhere near 133, and we're currently trading 138. So kind of a muted response, even though it is down. We're down about 4.5%, 5% right now. Is there still more room to fall? Absolutely. So we'll see if the market wants to continue to take that down there. Right now, this is about the second or third candle in a row that it's finding support at the 138 and trying to bounce back up. So we'll see. 140, please hold. It'll be all right either way. Like we were just talking about, if we look at the daily here, the October 31st candle gives you a good anchor on whether the market really wants to sell this off. The October 31st candle here, where we broke down, right? It was a particularly bad day for NVIDIA, almost 5% to the downside. We start breaking below the 132, 131 level, and you can start making the argument that we're back within the range that we've sat in for the last 6 months. Then you can make the argument that this potential market leader could be starting to distribute out, right? For those of you in TTI, you know what that means. And that's kind of the name of the game is, are financial institutions starting to distribute these shares out to retail traders and other people that expect this to continue to go up? We can see signs of that, right? We'll see distribution signs, we'll see volume, we'll see horizontal channels. If we fall back within the same range that we were in, since the July into early October breakout, yeah, we can have those conversations. But as of right now, we're not there. We're not even close. We have to break down, start hitting some lower lows. We have to get that the weight of the evidence on the backside there to really push that narrative, and it's just not there. Now, it's only about 3 minutes into the initial reaction, and we're right back up to basically where we closed. So very, very volatile. Unless we start breaking below that October 31st low, this is a nothing burger at all. We didn't even hit the expected range to the downside. I think this is going to, who's the biggest loser here if nothing happens? Everybody that bought options in either direction for this event, those are the losers. As of right now, we're about to break up. We're about to be positive. That's funny. I have no opinion on the earnings. That's not my domain. I have no idea, but I do know where I'm going to be more bearish than bullish and where I'm going to remain bullish. And if we close anywhere above, that 132 area, I'm not going to freak out about this at all. And if we look over really quick at the indexes here, the indexes are slightly down, but nothing too crazy. Qs are down 0.22%, right to where we were about 10 minutes before the market closed. So it's not that big of a deal. The S&P 500 is down 0.07. The Russell 2000 is up 0.02. Tech is technically, look at this. The tech sector is up. NVIDIA is slightly down, and the tech sector is up off of the close. Listen, a lot can change overnight. I have absolutely no idea, and I don't make any predictions based off this stuff, but it doesn't seem like this is the most bearish thing I've ever seen. As a matter of fact, this is kind of an okay response. I think the biggest losers, if this holds here, are going to be the people that bought this stuff with either short-term aspirations of up or down. Josh is number one. We love Josh. Josh has been in TTI for almost 4 years now. Josh is our hidden gem.
Gem in the rough.
And he had boots on the ground in the crypto market. I retired. I'm not willing to go and sleaze around in some of the darkest crevices of the crypto ecosystem anymore, but Josh is. So more power to Josh.
I was in there last night at 1 a.m. just sliming around. Just
can't do it, man. I can't do it.
I'd never recommend to anyone.
But we have a bunch of trades right now that are live in the crypto market right now, and although today alts did pull back, a bunch of the trades that we were able to put on. I'll show you one really quick while NVIDIA is still trying to figure this out. One that I'm excited to be in right now is ADA. For those of you that have been in the crypto market as long as I have, going back a couple different cycles, you're probably saying, what the hell? You're long Cardano? Nobody loves Cardano, but the breakout was there. And so we're going to look at that really quick. And I also want to, as NVIDIA is kind of figuring itself out, I want to talk really quick about the theme change, what we've seen in the market over the last couple of weeks. Realistically, these higher speculative, higher beta, crappy stocks are breaking out into stage 1, into stage 2s. We're in a bunch of these right now. We're going to kind of talk through them really quick. This is a stage 1 and 2, a potential stage 2. This is the type of setup that I'm talking about in the equity market as well. These big long ranges that you build out for 2 years. You can buy these range high breakouts, and particularly when you have the weight of the evidence on your side to support these breakouts, they do end up being winners. Now, we don't know exactly from the very beginning which one's going to be the 1,000% winner and which one's going to be the 100% winner. Some of them are also going to fail, but if you swing at the same pitch time and time again, and you know that there's a statistical edge, which these stage 1 into stage 2s have, you're going to make money over the long term. So ADA giving us the exact same setup as a bunch of the setups that we have taken over the last 2 weeks in the equity market, and it's working. Amazing how that works, right? Speaking of a couple of those setups, I'm going to go just off the top of my head, names that I know that we have positions in. And these are positions that we have hundreds of % in profit. As of right now, the SoFi position that I have, if I can find it, my SoFi position is up in the high beta account at least. SoFi is up 640%. So what you're looking at right here on YouTube, over on TikTok, you're looking at the Robinhood account. You can see that 640% win. I also went out and bought some Junes of next year that are up 44%. For those of you on YouTube, this is the exact same setup we just went through with the ADA, right? It's a stage 1 into a stage 2. Find these big long horizontal supports or horizontal channels, excuse me. Generally, they last a year or two. And what's really indicative of these types of breakouts is market conditions. This is a crap stock. I don't care if you're a SoFi long-term holder or not. This is a 5.33% ADR crap stock that has done nothing for 2.5 years. Poster child of the 2020-2021 bull market, IPO'd, ran up high, and then did nothing for multiple years. Once we finally get the breakout, right, we're starting to see a theme play. We got to take these. And if you're not ready to take this type of stuff, you can miss them because SoFi didn't really look back all that much. You had one opportunity after the initial breakout to actually get in, and if you didn't get in, you missed it. Another one that we're in that's performing less brilliantly but still performing is Affirm. Same type of stock, right? It's a crap stock. 7.25% ADR, has done nothing since 2022. We bought the breakout. It's currently running about halfway up to the price target. This is a free trade for us, up and over 100%. Zillow, a crap stock that hasn't done anything. This is actually something we were able to add into on a pullback, right? Once this actually loads, I'm in Brazil right now, and my internet is crap because it's storming outside. Imagine that. It's the same idea, these stage 1 into stage 2 breakouts. I mean, these things are just everywhere in the market right now. We just posted one on the newsletter last night about Bros. All right, we were talking about BROS. Why can't you go out and buy BROS as it gaps up? And it did today. Today it ran huge, right? Up nearly 6% on the day. And this is a free trade now inside of TTI. For those people that are inside of TTI that were able to grab the contracts off the initial break on the power earnings gap, they were able to take advantage of today and close half of their position for over 100%. But it's the same setup, right? Horizontal channel over multiple years. You get the big PEG, power earnings gap. For whatever reason, the market decides that Bros is viable now. And we decided to risk on, risk off at 49.5. And now that contract's up over 100%. It's not just these. I can continue to go on off the top of my head because there's so many of these right now. So, and this is definitely a theme change. I'll show you a chart really quick that really culminates this, and then we'll go back and look at NVIDIA. This Warby trade, Warby Parker. I mean, this is, what the hell? This is an eyeglass company. This has been absolutely a terrible stock since it IPO'd back in 2021. It's done nothing, and yet here we are breaking out into a stage 2 breakout. We just tapped our price target today and closed up there near 23.25, currently trading 23.27. So this is a trade that we were able to take half out of the trade at 100% and then take a couple off today as we were tapping into the price target, right? So now we're paying ourselves. The worst thing that can happen on this trade is that we make a bunch of money. The best thing that can happen is we make a lot of money. There is no loss now. And I just showed you 4 or 5 of the exact same setup time and time again. If you're interested, just go through an ETF like ARK. ARK is exhibiting the exact same characteristics as the chart I just showed you. All of these. Stage 1 into stage 2. This is a multi-year high for ARK stocks. You don't have to love Kathy Wood. Totally fine. I understand. But from a technical standpoint, this is a 2+ year horizontal range, multi-year high breakout up and over an overhead resistance area, upward sloping 200-day moving average, and a bullish momentum regime. Take a crack at it. You don't want to go and own ARK. Get inside of ARK. Figure out what types of stocks are inside ARK, right? That's how you make a bunch of money in these types of market conditions. If you're just going and buying Mag 7 stocks because that's what you know and what you expect, you've probably not had a very good couple of months. We're looking at NVDA right now. It's currently trading 139, so it hasn't really moved a whole lot. I'm going to show you Microsoft. Microsoft hasn't done anything since it peaked in July. So if you're consistently just buying Microsoft, expecting it to go up because that's what happens in bull markets, you've been wrong. You have to do the homework. You have to figure out what's outperforming the market. Microsoft has not done that. As a matter of fact, Microsoft is trading below its 200-day moving average, and it's starting to slope down. About Apple. Apple hasn't really done anything since its July highs. We've tested all-time highs, but then we're sitting within a consolidation range up here. Is it distributing? Is it going to break out? Now, my bias is we're going to continue in the uptrend that we're currently in right now. But this has not been a winning trade. If you've added into this trade, other than potentially the August 5th breakdown, this has not been a winning trade for the last couple of weeks or months, right? So there's a lot of opportunity costs being tied up right now in these Mag 7 stocks, NVIDIA included, by the way. And there's a lot of areas of the market right now that are absolutely running. As a matter of fact, if we go and we look at just the Mag 7 index in of itself, doesn't this kind of show you what I'm talking about over the last week and a half, 2 weeks? This hasn't really done a whole lot. Now, it's not bad, don't get me wrong. Mag 7 stocks are still something that should be a staple in your portfolio, but from a trading vehicle standpoint, you're going to want to own things that are outperforming the market, not moving in line with the market, which hasn't really done a whole lot either. So if we go and we look at some of these stocks really quick that I was just talking about, of course, here's another one, a crypto mining stock that also now is apparently an AI stock. This is something that we've been in since April or May. It's 1,200% winner right now. Robinhood, we were able to buy the pullback, right? These are different types of stocks than your Apples and your Microsofts. So once again, think outside the box here, find what's outperforming, and go and own it at right levels. I'm going to go back to NVIDIA really quick, and we're going to see if there's any movement here. Randy, do you have anything to add on the earnings report side of this with NVIDIA? Go ahead.
So they did beat the top and bottom line numbers, and actually their fourth quarter expectations. They raised guidance on their fourth quarter expectations. But the thing that everybody was talking about, and what I just saw on article after article, was this new Blackwell AI chip, and that's apparently going to be delayed a little bit later than expected. And so the market is apparently not taking kindly to that news.
So I know that prior to earnings, there was talk that Blackwell, it was overheating or something, and that they were going to force their suppliers to have to reconfigure server racks or server space or whatever to try to give it more airflow to try to cool them down. I wonder if that must have already been baked in, right? I mean, that news has been out for about a week now, so I can't imagine that that's going to really stifle any price action now. But you're saying that essentially guidance is part of the reason why it's a muted response, even though they beat?
Well, overall guidance from what I'm seeing on Q4 looks fine, and they've actually upped it. But the thing that everybody was focusing on, these new chips, they're going to be delayed. So I don't know when they were supposed to come out, but apparently they're going to be coming out later than anticipated, this new batch of chips or whatever.
Interesting. Well, I'll tell you right now, it doesn't seem like the market hates it. Like I said,
yeah, that's true.
Like we're down. I understand. You can't say this is a rock star report by any means, but we're down, what, 1-2%? And we were just talking about this, the expected range on this, 157.5 to the upside, 133 to the downside, and we're currently trading at 143. The biggest loser, I should say, the biggest winner here are the guys that were writing weekly contracts to both call buyers and put buyers. I mean, this is just a total premium burn. Market opens up tomorrow and we're anywhere in the vicinity, sub 150 and above 141 or 140. And I can't imagine too many people get paid, considering IV on the weeklies is 152%. So yeah, look at that. Options contract writers are going to be the big winners here if this continues to hold where we're currently at.
Yep. And this could still jump. I mean, I think the CEO Justin is still talking. So I mean, the price doesn't have to. I mean, we could wake up tomorrow morning and see this thing up another $5 or so up or down. But this really benefits. Like you would talk about the winners of the people playing this. I think the people who took the NVIDIA trade going into earnings, right? I mean, obviously we want a great earnings result, but the people who took this trade ahead of earnings, who now have free contracts, this was essentially a free ticket.
Yeah.
And they didn't have to worry about it. I mean, that's what benefits the system so much, is taking good trades and good names, flipping those free, and then riding out to see if earnings really pays off.
You know, people don't really understand it until they do it the first time or two times. They don't understand, like, I don't know, lack of a better word, the power of being able to hold these lotto tickets and have zero risk. It's essentially like somebody going and just giving you 20 Powerball tickets, giving them to you. You didn't pay for them. You have nothing to lose, but you have infinite upside potential if they hit. Why would you not go and play? If they're free, you can't lose anything. All you can do is win. Why would you not play the game, right? I don't think enough people take into consideration how powerful that is, particularly in our situation. We still have another 2 months of expiration on this. So it's not like we have weeklies that are free. It's not like we have things that are expiring in early December that are free. We have Januaries and into 2025. So let's say NVIDIA doesn't do anything for the next week. It just meanders here and then starts going higher. We still have time to make a bunch of money. They're free. We have nothing to worry about. Until people actually go through the motions and how liberating that is, not having to worry about these types of binary events and losing a bunch of money on their account, they're not going to do it. But the first time you do it, for anybody listening to this, if you're not inside of TTI, I challenge you, take trades, try to turn them free, or at least remove the principal from the trade as early as you can, and then watch how much easier it is to hold these trades through events like earnings. Or if you're an options trader and you're buying something with 6 months of expiration and you're able to turn it free after 2 to 4 weeks, wait until you feel how liberating it is to be able to hold a trade for the next 5 months without having to worry about your portfolio every day, because if it goes to zero, you lose nothing, right? You lose nothing. And if it doesn't go to zero and you have, a general idea of which way you should be buying these contracts, you have a bunch of money to make through the bigger move of the trade. So 100%, I agree with you, Randy. It's generally one of the first things people, when they come into TTI, like when they come into TTI in particular, people are like, I can't believe you guys have 100% winners every day. And it's like, not everything wins 100%. We have our losses. As a matter of fact, probably about half of the trades we take don't end up making us any money. But the ones that do, the other half, tend to make up a lot of money and pays for the losses. And it all comes down to managing that risk at 100%. I mean, like, seriously, the first week people are in here like, I've never even had a 100% winner. What the fuck do I do with this thing? I'm like, sell half, let it keep going. They're like, are you sure? I'm like, wait till you do it. We have a couple guys that have only been in the group now for 2 months. And for the first week, it's like, should I just close this? I'm up 60%. I'm like, why is 60% the number to close? Is the trade over? Right? It's like the Kobe quote. Is the trade over? I don't think so.
Yeah, and this approach really does benefit people who trade options. I mean, you can take positions and hold through earnings with shares, but it's far more risk, right? Because you can, potentially you can have a really catastrophic move if you're like in a shares play and it gap below your stop. But with options, you only lose the premium that you pay for, and that leverage potential is infinite.
It's a cheat code. I know there's a lot of people that don't like trading options, and I know there's people that only like trading options. I don't think that options are the best way to trade in all scenarios, but I do think, particularly in low IV environments, call options are an incredible way to leverage a relatively small amount of money, particularly if you're able to buy into some sort of either all-time high or multi-year high where you don't have to worry about a bunch of overhead resistance. Particularly, like I said, in a low IV environment, because what do we generally see at breakout points? Volatility, right? We see implied volatility tend to rise. And what happens if we're holding calls or puts, but calls in an environment where implied volatility is increasing and we're getting the push in the direction that we expect? We get paid 2 different ways, right? IV expansion also impacts premium from a profitability standpoint, as does the directional move. So 100% I agree. All right, we didn't really get any move in Bitcoin. It doesn't look like Bitcoin is worried whatsoever about the move here with NVDA, and right now we are trading at around 142. As Randy said, the CEO is going to start speaking, and this could obviously move the market as well, or not the market, the stock as well. But as of right now, we're going to sign off here in about 2 minutes. We're looking at a slight down NVIDIA, down about 3%. And once again, the options contracts were pricing in a move down to 133 or as high as 157, and neither of those got hit. So the options writers look like they're going to be the big winners here. Bot calls for 2026 in NVIDIA. Godspeed, my man. We have 2025 though, so. The cool thing about the positions that we bought, where we were able to take advantage of NVIDIA after it sold off into the August 5th breakdown and then started to rally again. So we were able to add into the pop-up through the middle of August. We were also able to add in after we started to bounce off of the 5th of September, and we were able to turn both of those tranches free relatively quickly. Some of it has to do with luck, right? Obviously, we had a game plan and what we wanted to do, but the whole idea was to try to get these contracts free before earnings, and we were able to do that, which is why we're able to hold these things through this event and not really worry. We don't have to sweat whatsoever. So, any parting words, Josh, on the crypto front?
We're going higher.
We're going
I don't
higher.
know what to tell you.
No, yeah.
I mean, I just posted a tweet from Biz General, I think it was Byzantine General. He noted that perps are kind of going all over the place during this after hours in terms of U.S. markets, people playing this earnings. But someone on Coinbase just started massively bidding spot Bitcoin. So whether that's additional like aftermarket hours ETF inflows, whether that's Sailor, buying a boatload more of Bitcoin, but someone in the U.S. has flipped that script and change the funding to negative for spot bidding. So Bitcoin's holding up well. It's going for the daily high right now, 94.55, going for 94.6. So maybe we'll see 95K before dinner.
Listen, Bitcoin breaking out into all-time highs is not bearish for either the crypto market or the TradFi market. Don't let anybody tell you otherwise. We have the data. There's a correlation between the TradFi and the crypto market. When one of them is going up, generally the other one is not doing terrible. In this case, both of them are going up. So it's good to see the crypto market go up after hours, even with NVIDIA slightly down. Any parting wisdom here, Randy, before we call it a session?
No, nothing in particular. Just wait for tomorrow's close.
Wait for tomorrow's close.
That's what I'm going to be looking for.
The close knows.
That's right.
Sage advice. All right, I appreciate you guys. Thank you, Randy and Josh, for helping me out here, and the rest of you guys. This is your first time tuning in. Go ahead and subscribe on that YouTube channel. We put out content that doesn't suck. It's 100% based off of price, no opinions or bias. We've had an incredible year. We've had an incredible 2 years. Actually, this is the best year I think we've ever had as a community. We're a slave to price action, and so if you're into this type of trading and you like to follow trends, we're your guys. If you have any questions regarding what we just went through, feel free. You can leave a comment below on this video, and I'll respond when I can. Hope you guys enjoy the rest of your night. I'll catch you.